After CEO Elon Musk announced his ownership on Twitter on April 4th, the stock of Tesla has been volatile, dropping 42%. This development hasn't stopped one Tesla bull, though, as he thinks the stock will surpass itself in the coming years. David Lee, the host of the well-liked investing YouTube program, is a Tesla bull. He is well known for being a devotee of Tesla, and in a recent post, he claimed to have increased the value of his first investment in Tesla stock by a factor of 100. He stated that he had anticipated the market value of Tesla stock to go from $3 billion to $40 billion when he initially bought it. Now that he's said it, history might repeat itself. Which statistical evidence supports this belief? What's the consensus among analysts? Continue to watch to find out. As the dispute between Musk and Twitter gets more complex, some investors might be asking if Musk has lost focus on one of his most lucrative businesses. Tesla has overcome its stock-based distractions to become an incredible force. The company's announcement of a solid first quarter and its ambitious long-term objectives thrilled investors. Still, the question that has dogged Tesla for years remains. Is its valuation excessive given its capabilities? Recently, historically high inflation, rising interest rates, and the economic fallout from Russia's invasion of Ukraine have tested growth stock values. As of today, the Nasdaq Composite has fallen by 28% for the year, while the SBO Volatility Index, also referred to as Wall Street's fear gauge, has increased by more than 80% during the same period, signaling current investor worry. One of the most contentious stocks on Wall Street, Tesla, has now joined the sell-off after shedding 41% of its value since the year's beginning. Still, the biggest and most cutting-edge manufacturer of electric vehicles is Tesla. According to industry website Cox Automotive, Tesla has a 75% market share in electric vehicles and sold more high-end cars in the U.S. in the fourth quarter than Audi, BMW, Lexus, and Mercedes-Benz put together. If you had invested $10,000 in Tesla inventor Elon Musk 10 years ago, your money would today be worth an average annual return of over 70%. Over that same period, $10,000 invested in the S&P 500 increased by just 2%. With only a 14% annual compounding rate, that translates into a nearly 13,800% gain in value for those investors. 12 years ago, a $10,000 investment would be worth $139,000 today. Given Tesla's meteoric rise, it is understandable why some people may be wary of the brand. In 2021, the company supplied about 1 million electric vehicles, and in the first quarter of this year, it delivered another 310,000, up 67% from the previous year. This puts Tesla on track to deliver on Musk's 2030 goal of 20 million Teslas. Lee claims that the same mistakes individuals made with the original iPhone are being made with Tesla. In his opinion, Tesla is only beginning to embrace complexity through innovation. He was shocked to learn that, by merely owning common shares, the Tesla stock had increased 100 times in just over 8 years, as we previously indicated. He believes that the stock will rise much further in the next 8 years. Tesla is the most valuable stock in the car sector, even with a 100-fold increase in value. At a valuation of over $226 billion, it is more than twice as valuable as Toyota, the second largest automobile manufacturer. It's also worth more than the whole value of Ford, GM, Stellantis, and Honda at the time this film was made. The stock has recently declined, with a market capitalization of roughly $738 billion. However, the EV leader's market worth still exceeded $1 trillion in late 2021. Elon Musk's company, which was valued at $1 trillion today, will reach that level again. And if it does, it will do so because of the company's profitable status, rapid sales growth, and rising earnings growth rates, all of which haven't helped Tesla, despite macroeconomic challenges and Musk's highly anticipated acquisition of Twitter. The industry that makes electric cars is still expanding quickly. The Model 3 and Model Y, which are mass-market sedans and electric crossovers, respectively, are largely to blame. From its gigafactory in Texas, where it is integrating its own 4680 battery cell, it has now begun exporting the Model Y, given the car industry's persistent supply chain problem. This is anticipated to be a big advancement. Despite the insane personality of its CEO, there's a good chance that Tesla will lead the industry for many years to come, and that its stock will continue to be a great investment for the same amount of time. Lee claims that far too many people base their assessment of how their firm fared on its understanding of the earnings report, rather than comparing it to analyst projections for metrics like EPS, revenue margin, and other metrics. He went on to say that the problem with this approach is that analysts do not own the majority of common stock shares. Some analysts are employed by businesses where they do not hold any stock. For these experts, it doesn't matter if the company's profits surprise or disappoint them. The expectations of analysts and investors are often at odds with those of new, fast-growing businesses. Tesla has a track record of exceeding expert projections, thus this is true. The company's prospects were rising for a while, even if the stock price was down. This was the case despite issues with the supply chain, higher material costs, and the closure of the Shanghai factory. On April 2, Tesla revealed that first-quarter deliveries had increased slightly to 310,000 units, while production had reached 305,000 units. Tesla has recently been the subject of a barrage of positive headlines on its first-quarter output of cars, which climbed by 69% year-over-year and resulted in an 87% increase in automobile income. Because sales increased more quickly than manufacturing, Tesla is seeing higher profit margins on every vehicle it produces. The company's higher-priced Model S and X automobiles saw price rises throughout 2021, which contributed to the margin increase. Production efficiency improvements were also a factor. On April 20, 2022, it revealed $18.8 billion in revenue for the first quarter of 2022, an increase of 81% over the same period the previous year. This exceeded analysts' estimates by $17.8 billion, providing a brief lift to the stock price. Furthermore, it finally opened its $5.4 billion production plant in Berlin, which was intended to service Europe. Additionally, a stock split is being considered, which should increase the stock's appeal to individual investors. Tesla is about to make its debut in the luxury car market. Because of this, its valuation ought to be 35 times earnings as opposed to 6 times earnings for General Motors or 8.6 times earnings for Toyota, even if Tesla's valuation is currently 90 times earnings. If it keeps growing, it might get to that point. Investors were also informed of some good news by management. Over the next few years, it wants to raise car deliveries by 50% yearly. By 2022, Tesla may earn $14.9 billion if revenue growth is projected based on this estimate and retaining the company's 17.7% profit margin. This indicates that Tesla's valuation is 49.5 times its full year 2022 earnings, which is reasonable for a company that plans to grow at a rate of about 50% annually. Which factors are driving Tesla's stock then? The most obvious factor driving Tesla stock prices is the company's constant innovation and Elon Musk's visionary leadership in the business world. The company might benefit in the coming years from any rise in gasoline prices or new laws pertaining to cars with conventional internal combustion engines. The top and lowest price objectives of experts, however, differ significantly in terms of pricing. In a year, the stock is expected to reach $1,500 according to the most optimistic analysts. The lowest price forecast was set at just 250 wall investors. The outlook for the corporation is more optimistic according to algorithmic predictions. The research states that the stock is a very solid long-term investment and that it may increase in price to $1,217 in the upcoming year. Concurrently, the company's 5-year projection indicates that the price of Tesla's shares may potentially hit $2,876. Tesla is leading the way in the increasing market penetration of electric automobiles. Right now, Tesla is a great investment if you plan to own the company's stock for the whole 3 to 5 years. Dave Lee has repeatedly said that he is in it for the long haul with this stock, and we believe you should do the same. However, we are unsure of when the bear market will end, so the stock could fall even worse in the near term. By progressively acquainting themselves with the stock over a defined period of time, investors can also reduce risk and possibly achieve a lower purchase price. Despite the recent decline, many still think that Tesla stock will only rise if it clears a few obstacles. This is because the company's market value is almost equal to the combined market capitalization of the 6 largest manufacturers in the world based on car sales. What price do you personally want to see for Tesla?